If you are a Canadian investor looking for a simple, long-term investment strategy, the iShares Core Equity ETF portfolio, ticker symbol XEQT, has become one of the most popular all-in-one solutions on the market. XEQT is designed as a one-ticket portfolio that gives you broad, global equity exposure with a single purchase. It holds a mix of Canadian, US, international developed, and emerging market stocks, providing instant diversification across thousands of companies worldwide. By buying XEQT, you are essentially owning the global economy in one ETF, which makes it a perfect core holding for those who believe in long-term equity growth. The fund targets a 100% equity allocation. This means it does not hold bonds or fixed income products. Because of this, XEQT is built for investors who are willing to accept short-term volatility in exchange for higher potential long-term returns. Historically, equities have delivered annualized returns of roughly 7 to 9% over decades, but they can also experience sharp drawdowns during market corrections or recessions. XEQT is best suited for investors with a long time horizon, such as 10 years or more, and the discipline to ride out market swings without panic selling. One of XEQT's biggest selling points is its simplicity and cost. The management expense ratio, or MER, is only about 0.20%. This is extremely low compared to actively managed mutual funds that often charge fees above 2%. Over decades, these fee savings can add up to tens of thousands of dollars in additional growth. XEQT is also rebalanced automatically, so the portfolio maintains its target allocations without you having to buy or sell underlying assets. This removes the stress of market timing and helps keep investors on track with their goals. From a performance standpoint, XEQT has delivered strong returns since its launch. The fund's growth closely mirrors the global equity markets because it is broadly diversified. In bull markets, XEQT captures most of the upside, while in bear markets, it will decline in line with global stocks. The key here is that XEQT is not trying to beat the market. It is designed to match it. And history shows that matching the market at a low cost often outperforms most actively managed strategies over time. Now let's look at the fundamental analysis. XEQT's underlying holdings include roughly 25% Canadian equities, around 45% US equities, and the remainder split between international developed markets and emerging markets. This mix provides exposure to sectors like technology, financials, healthcare, industrials, and consumer goods. The largest single weighting is to US equities, which means you benefit from the long-term growth of companies like Apple, Microsoft, Amazon, and other global leaders. The Canadian allocation gives you stability in sectors like banking, energy, and materials, while international exposure ensures you are not overly reliant on North America alone. From a technical analysis perspective, XEQT trades like any other ETF on the Toronto Stock Exchange. It follows global equity trends, so its price will generally rise during periods of economic expansion and fall during global recessions. Investors using dollar-cost averaging, meaning regular, consistent purchases over time, can smooth out volatility and take advantage of market dips. Over long horizons, the technical picture for a diversified global equity portfolio remains strong, as the overall trend of global markets has historically been upward. In terms of strengths, XEQT offers unmatched simplicity, instant diversification, low fees, and automatic rebalancing. The main weaknesses are its lack of bonds or cash, which means it can experience large drawdowns during market crashes, and its heavy reliance on global equity markets, which exposes investors to currency fluctuations and economic cycles. Opportunities for XEQT lie in the continued growth of global markets and rising participation of emerging economies. Threats include severe global recessions, geopolitical conflicts, and potential currency risk for Canadian investors holding large US and international allocations. For investors with a long time horizon and a strong risk tolerance, XEQT is a compelling buy. Its low cost, global diversification, and one-ticket simplicity make it an ideal core holding for those seeking equity-driven wealth creation. Based on historical equity returns and current market conditions, A reasonable long-term price target would be an annualized return of about 6 to 8% over the next decade, though year-to-year results will vary. My buy recommendation is not about a specific short-term price, but rather about the strategy. Buying XEQT on a consistent schedule and holding through market cycles is a disciplined way to build wealth over time. For investors who like the concept but want to adjust risk, there are excellent alternative ETFs. If you want a slightly lower risk option with some bonds included, consider VGRO from Vanguard or XGRO from iShares. These growth ETFs typically hold around 80% equities and 20% bonds, providing a smoother ride during market downturns. For an even more conservative approach, VBAL or XBAL hold around 60% equities and 40% bonds, balancing growth with income and stability. On the other hand, if you want even higher equity concentration and are comfortable with extreme volatility, you could look at US total market ETFs like VT from Vanguard or add leveraged equity ETFs, but this carries significantly more risk and are not recommended for most long-term investors. In conclusion, XEQT remains one of the best all-equity ETF solutions for Canadians seeking a simple, low-cost, globally diversified portfolio. It is a true set-it-and-forget-it investment for those with a long time horizon and the patience to stay invested through market ups and downs. If your goal is maximum long-term growth and you can tolerate short-term swings, XEQT deserves a place at the top of your watch list or even in your core portfolio.